Hello everyone, welcome to Gracie Talks Well today. So I will be bringing to us yet another topic on universal life insurance. Universal life insurance is one of the arms of permanent life insurance. It is comprised of two. The permanent life insurance comprised of two types of insurance. You have the universal life insurance on one hand, and then you now have your whole life insurance. Okay, we also have the one I'll call the first one, which is the third, if we're going to bring it together with the two I just mentioned earlier, is temporary life. Now, why am I zeroing in on universal life? It's because of its characteristics, its peculiar uniqueness that I would like us, especially young moms, or if you are a mother of grown kids, it's still not too late. I'll bring the context of why I'm choosing those words specifically. Why I'm saying for young moms to take advantage of universal life and leverage on the unique, in the unique investment component that it has is for this reason. So let us start by looking at universal life insurance in detail. So, what is universal life insurance? Universal life insurance is a wealth tool. Okay, it's not just a death benefit. When people hear about life insurance, they're like, oh my God, it has to do with, paying out my beneficiaries when I pass on. Well, that is correct, but that is not all it entails. So, like I mentioned earlier, universal life insurance comprises of the face value, which is also called the death benefit, and a flexible long-term asset that grows tax-free. Okay, please clock that word tax-free cash value while it's providing you that long-term protection for your loved ones. Okay, so I will be emphasizing here on how you as a young mother can use it as the foundation for building your children's financial legacy. All right, so thank you very much. If you're watching this video, thank you very much for clicking on to this channel, and I will ask that you please like, subscribe, click on that notification button so that when I upload very vital important content on how to create wealth, you'll be the first to know. All right, and also share to other mothers who are within your community so that we can all build that wealth together. Now, going forward on universal life, it has a built-in investment component that grows your money over time. So how does it work? If it is having these two components, how does the dynamics play out? So this is how it works. Every premium payment you make, whether you are making it on a yearly basis or you're making on a monthly basis, is split into two. Okay, so if it is split into two, when you pay your universal life premium, let's say every month, part of it goes to cover the life insurance protection, which is the death benefit aspect that is paid in lump sum, tax free to your beneficiary when you pass on. And the other part goes into the cash value account. And now this is your personal growing money bucket, or I'll rightly put it as your bank. Your cash value earns interest. So that is why I put a picture as it's a bank. When you put your money into a savings account or an investment account, you expect that it grows in value using the principle of compounding interest. So it's the same principle that applies for universal life insurance with the aspect of the cash value. Okay, now let's put that in perspective. Going forward, another aspect that is very key is that your cash value, which earns interest or investment returns, and depending on the kind of universal life policy that you opt for, it can earn you a guaranteed interest rate, or it can be linked to a market index like the S&P 500, but without the risk of losing money if the market crashes. This is very ideal. Looking at the fact that you have already, you know, decided to invest, because that is what it is, invest universal life aspect, and also have your debt benefits. What should now be the catch that will make you want to keep putting away money into that portfolio? The catch here is that your interest rate is guaranteed, irrespective of what the market situation is. How do they guarantee this? They guarantee your interest rate by linking it to a market index like the S&P 500. And that is why you would not be losing money should there be a, to the market bubble bust. The third aspect that I want to bring to your attention, young mom who are well makers, is that the growth inside the policy is now tax sheltered. You might not understand how impactful this unique aspect of universal life insurance is if you are not living in the Western world where the system is, the system rotates around taxes. So being able to save on tax is huge in terms of growing your wealth. Now, here is the sweet part. The money growing in your cash value account is not taxed every year. Like, you have several things in the North American system, they revolve around taxation. This particular portfolio does not experience that, in the sense that your investment in universal life insurance is sheltered from being taxed every year, even while it's earning that interest. It's sheltered from being taxed, and the growth stays inside that policy, and it keeps growing tax deferred. So your compounding interest is growing your wealth, and there is no tax obligation on it while it grows, whether over a year or 2 years or 3 years. Imagine how much growth that can give you vis-a-vis the savings that you are putting into that aspect of your universal life insurance. Remember, it's not like you pay in money into your cash value segment and then pay money into your debt benefit segment. No, it's a one payment, be it monthly, be it yearly, that is now split into two. So you are being helped here by not being bothered on, okay, if you are disciplined enough to intentionally pay into your investment portfolio. No, you are being helped by managers who manage your premiums when you pay them. Okay, I want to believe that you clocked this. Now let's move forward a little bit by me explaining again that this kind of tax deferred growth is like a tax-free greenhouse for your money. The fourth one is you can access that money tax-free too. So it grows tax-free on one hand. You access the money tax-free. How good can that be? That is why I'm really encouraging young mom, well makers. Everybody can take advantage of the universal life insurance portfolio, but it is a huge blessing and it's a huge money maker scheme. Let me put it that way. Huge money maker strategy is the better word for young mothers. One of the highlights to this is that when young mothers buy universal life insurance for their children, because the kids are young, So the life insurance risk is low. And the what it means is that it frees up more money for your portfolio managers who are managing your universal life insurance to set aside more money for the cash value component of universal life. So let's say you pay a premium of $100 every month for your young daughter, let's say your 2 year old or 3 year old or 10 year old daughter or son's universal life insurance policy. I'm just giving a scenario, it's not cast on stone, but it's just to give you an idea, buttressing what I mentioned earlier. So $20 or $25 is set aside for the death benefit, okay? While $80 is set aside for the cash value component. Meanwhile, if a much older person, it's is paying premiums for universal life, the reverse is the case. Now, the life insurance risk is higher because they are older, okay, and that doesn't provide much money for the investment component. This is the reason why I say to young mothers who are part of our team and who are watching this video, to take advantage of using universal life insurance to create wealth for your children. There is more that we are going to delve into, more benefits. It's not just the fact that you grow your money tax free and then you can access it tax free. And when I say access it tax free, I'm actually literally talking to those young mothers that you can access money tax free for your children since you're not, especially when you're not up to 18, you're still the policy owner of that universal life insurance for your child until you make them the owner when they are old enough and they are able to earn money to be able to pay the bills, right? So while that is going on, you have the access to that account and you can access the money to pay for the child's school, university education. You can access money from the child's portfolio, from the child's universal life insurance to pay for business. You can also access that as down payment. You understand? Okay, you can borrow against the policy and it's not considered taxable income. So how does that work? It's kind of like you're borrowing against your own money in your own bank. You cannot be taxed on your own money if you borrow in that regards. Okay, so if you have further questions and you're listening to me, please send a comment if if you need more clarity to what I have just said so far, and I'll gladly answer that question. You can also send me your questions through our email address that will be linked up on our description box. Okay, you can make withdrawals up to your contribution amount. That is called the ACB, adjusted cost basis, without paying taxes also. I will be discussing universal life insurance and the other aspects of permanent life insurance, whole life insurance precisely, in a series so that we can fully grasp the benefits of this strategy. I call it a wealth creation strategy. As long as you follow the rules, because there are always rules, right? The rules there are there to protect us, they're there to serve us, and not the other way around. So let's not be afraid of the rules. The rules are there to make your accessing or growing the wealth and accessing your wealth or your funds very convenient and safe. As long as we follow these rules and we don't over contribute, so there is a contribution room in effect, then the cash value grows and access stays tax free. And you might ask yourself, how do I ensure I don't color outside the lines? I don't make any mistakes and break the rules. That is why you have a financial advisor, and I will advise you, I will suggest that you reach out to a licensed financial advisor who will give you concrete advice and guide you along the lines to ensure that your wealth is protected just as much as you and your family are protected. What is the real life analogy I'm going to give to this? The real life analogy I'll give to this so that you are able to get the picture as a summary is that you think of universal life policy like a private vault. And in that private vault, the money you put there, they're growing quietly in the background. They're not bothered. It's not touched by the CRA. CRA means Canada Revenue Agency, and it can be opened to help your children succeed. So it's your vault, so you can open it at the time that you know you've grown your wealth enough for you to access your funds and all of that without tax headaches. How cool is that? Okay, thank you very much for staying till this point in my presentation, and thank you once again for clicking on my channel. I hope what I have discussed with you so far is very helpful. I am hoping you like this video, and if you do, please click the like button, subscribe. And what is the essence is so that you will get the notification on further series I'll be discussing on how you create wealth and how you can create financial security for yourself and your loved ones in your new country. Till we meet again, keep making money, keep creating wealth.